Now, Nigeria's Monetary Policy Committee will announce their policy decision next week. Traders at UBA say they do not expect any change to the current policy rate. Meanwhile, Nigeria's Debt Management Office is scheduled to conduct its September bond auction next Wednesday. And I have Ifeoma Onyejekwe, a fixed income trader at UBA. She joins me now for an outlook on the fixed income and FX markets in Nigeria. Thank you so much for your time, Ifeoma. And let's run through how the market has played out so far this week.
Hi, Kenneth. Thank you for having me. So major market highlights this week in the fixed income space were the OMA and NCD auctions, payment of bond coupons on Monday, Thursday, and today, and the release of the August inflation rate, which caused some ripples in the bond market. So the secondary markets in the treasury bill space traded on a relatively mute note this week, with major concentration on the primary markets being the main supply of treasury bills. We observed slight bullish sentiment, especially at the head and belly of the curve. At the treasury bills options, a decrease in the offer and sale of maturities compared to maturing bills was of interest, where the central bank, on behalf of GMO, rolled over a total of 158.75 billion compared to 178.75 billion of treasury bills, which matured on Thursday. And likewise at the OMO auction, where 70 billion was offered and sold, compared to 350 billion of OMO bills, which matured yesterday. The bond space also reacted with overall bullish sentiment as investors continued to lock up incoming funds in papers across the bond curve, though some weakness was observed midweek in reaction to the August 2020 inflation figures, which came out 40 basis points higher at 13.22 from 12.82%. The demand for bond papers was sustained as market players picked up attractive yielding bonds in expectation of a decline in swap rates at the bond auction for the month of September, taking place next week, Wednesday. And for our outlook, next week, like you rightly said, on Monday and Tuesday, has been scheduled for the Fed ultimate MPC meeting for this year. And though inflation rate is on the rise, as the increase in electricity tariffs and in the prices of KMS and diesel will take its toll on the consumer purchasing index, it is unlikely that the MPR is reduced from 12.5% since a low interest rate environment already exists, and CBN uses other moral solution methods such as frequent CRR debits to achieve their objectives. Hence, yields are expected to remain at single-digit levels in the treasury bills market, while we expect demand in the bond market to pick up steam going into next week as investors reverse their bond coupon payments expected in coming days. And for the money market, OBD and overnight rates experienced consistent declines from 5% and 5.75% respectively on Monday to 1.5% and 2.25% on Thursday, on account of the huge inflow of treasury bills maturities paid in this week. Hence, there was lessened demand pressures on market players. We expect rates going forward in the money market to remain at lower single-digit levels ahead of expected OMO maturities of 300 billion expected next week Thursday, and also bond coupon payments of about 51 billion dropping in next week.
All right, but very quickly, though, I would like to get your quick outlook on what to expect from the September bond auction.
Yeah, so we expect there to be a decline in rates. Yeah, we expect there to be a decline in rates, keeping in with the DMO wanting a low interest rate environment. So we expect there to be a decline in rates compared to August bond auction.